But you say, how many vehicles have we made as a percentage of total vehicles in the world? So far, we've actually are well below 1%. We're not even 0.5%. This year, there's still some chip shortages. And then next year will be, I think, probably a challenge with total battery production. And then certainly if you start going like 2-3 years out, it's all about total, how many gigawatt hours of battery are produced. That will be the limiting factor. And then going even further down into the supply chain, what is the rate at which battery materials are being mined and refined? And obviously we want to do that in an ethical and environmentally sensitive way. How many terawatt hours of battery can be produced per year? Our rough calculation is that it's about 300 terawatt hours is needed to transition the world to a sustainable energy economy. So we want to try to do as much of that as possible. And I think we're actually doing a pretty good job. Like we're, growing by, 70, 80% a year on average, and maybe even faster than that in the future.
I have a very hard time not thinking about this. And of course, we could all wait for Master Plan Part 3 to be released, and all of us can get the answers that we need, or at least have some sort of idea of what Elon's thinking and where Tesla's heading. But what's the fun in that? And so what I like to do in this video is to go through an exercise in how I'm thinking about all the different pieces and sort of hints and breadcrumbs that Elon has been dropping for all of us to try and figure out, okay, what does the actual vision of 50% growth year over year look like? And where does the 70 to 80% growth rate plus potentially higher in the future, what does that imply? And of course, extreme scale, what does that mean within that context? This video is meant to be a discussion. I have no idea if the path I'm going towards is actually correct, but this is what I enjoy to do. And of course, there's something wrong with me with the fact that I like to sit down and try to figure out what's going on here, but it's just one of my hobbies and I want to bring you guys along with me. So let me know in the comments what you think of this process. I also started a Twitter thread yesterday with a very similar discussion. A lot of people had a lot of great ideas, but as I went through the thread, I really felt the compulsion to put this in a spreadsheet and try to figure out what these gaps might look like. So thank you all for taking part of that discussion. And I use Twitter quite a bit to try and sort of formulate these ideas and bounce it around with other people. So if you do want to follow me on Twitter, my handle is @Farziness. Farzyness. All right, let's go ahead and get started. So here are the 3 things I think we should really focus on for this video. Number 1, Elon has reiterated the fact that within 10 years, Tesla is aiming to reach 20 million vehicles produced per year. The next thing is that 50% average growth rate year over year for the foreseeable future. And in this case, I really like to look at a 10-year horizon. I don't know if this is correct or not. I did a poll on Twitter to ask your opinion to see if this was realistic or not, and here are the results. But I think this number makes sense, mainly because for the last 4 or 5 years, Tesla has kept up within that pace of 50% revenue growth rate roughly year over year. And it does appear that Tesla is accelerating its growth at least in the next 2 to 3, potentially 5 years, which segues into the third point where Elon has said that Tesla is growing at 70 to 80% year over year and potentially more in the future. Of course, we don't have a time scale of what this actually means, but we can definitely make the assumption that there's going to be, valleys and peaks of that growth rate, which should average out to be roughly 50% year over year, in my opinion, for the next 10 years. So let's sit down and figure out how these numbers that Elon has mentioned actually play out in the next 10 years. So let's take that first assumption of 20 million vehicles sold per year by 2032, which is 10 years from now, roughly. Elon has mentioned 2030, but let's take 2032 as an example since he said 10 years from now. If we take that 20 million figure in 2032 and we look at the average growth rate from today through then, so from 2022 to 2032, 20 million cars per year is roughly an average of 32% growth rate year over year. I get 32% by using CAGR, compound annual growth rate. And the way to do this formula, I'll put a formula for it here, but you take your ending result, you divide it by your beginning result. So 20 million divided by roughly 930,000 units to the power of 1 divided by the number of periods, number of years that have elapsed from beginning to end. So in this case, if we go from 2021, which is 930,000 units roughly, to 2032, which is going to be that 20 million number, that's 11 periods, 11 years total that have elapsed from 2021 through 2032. If you're enjoying what you're seeing so far, I would love it if you throw me a like. It helps the YouTube algorithm show this video to more people. Thank you very much. And so that 32% number wouldn't really jive with that 50% average growth rate for Tesla for the next 10 years. And so where my head goes next is, okay, so is there a way to fill that gap between 32% and 50%? What would that gap entail? If we extrapolate out a $50,000 average selling price for the cars at 20 million units per year by 2032, we get a revenue number of roughly $1 trillion. And if we do the same exact exercise with the compound annual growth rate of roughly $1 trillion compared to the $47 billion that Tesla did in just automotive. So this isn't the 53.8 billion total revenue that Tesla did in 2021. It's just looking at cars, the 47 billion. You still get roughly 32% compound annual growth rate. So again, we have a gap between 50% and 32%. So then I'm like, all right, so we know that Tesla's car revenue is going to be roughly $1 trillion if they aim to do 20 million cars by 2032 or 20 million vehicles by 2032 at an average selling price of, say, $50,000. Again, could be more, could be less, but let's just assume 50,000 for this exercise. Elon has mentioned before that the size of Tesla Energy is going to roughly equal the one of vehicles and perhaps even exceed it at some point because of the market. And so let's go ahead and make the assumption that the rest of the revenues of the company, so if you take the car sales in 2032 of roughly $1 trillion, and you assume that the rest of the company, in this case, energy and say everything else, is the same size, then we can see that we have a total revenue number in 2032 of $2 trillion. And if we do that same exact compound annual growth rate formula on that $2 trillion number versus the total sales that were recorded in 2021, which is 53.8 billion, we come out with a compound annual growth rate of roughly 39%. So now we're closer to that 50% number, that 50% average growth rate, but we still have an 11% gap. And so next thing I'm like, okay, let me go ahead and try to reverse engineer how many car sales there would be in the future using some data that Tesla has given us. And for this piece, I'm going to reference the Battery Day presentation, specifically this slide. This is a slide where Tesla has described what the breakdown of each segment of transportation looks like in the world. And if we make some assumptions roughly of what the average kilowatt hour pack is going to be for each one of these areas, the units sold that will be required that correlate to that 10 terawatt hour number is roughly 100 million vehicle or transportation units per year. But let's go ahead and assign what the average selling price would be for these units. And I've assumed these here on the screen. And so if I take the percentage breakdown of what each one of these units would look like from Tesla's perspective and apply an average selling price that I'll list here for each one of these units, we come out to roughly $1.17 trillion per year at 20 million total by 2032 using these breakdowns for each one of these segments for Tesla. If I add that missing 170 billion, let's say, for this piece, the compound annual growth rate only goes up by 1%, right? So we go from roughly 38% to about 39%, closer to 40%. But we have a gap still of 10%. And so at this point, I'm like, okay, let's see what the actual total revenue number would look like if we apply a 50% annual growth rate per year from 2021 through today. So our starting base is $53.8 billion, and we apply a 50% growth rate every single year from that point forward. And that number comes out to be $4.65 trillion. And if we compare that to the combined size of vehicles and everything else that Tesla is looking to sell in 2032, which again is going to be 20 million units per year, which extrapolates out to roughly $1.17 trillion per year. And if we assume that the rest of the business is going to be equal in size based on Elon's comments around energy, the total number is $2.34 trillion, which leaves us with a gap of $2.3 trillion. And so we need to sit down and figure out, okay, so what is this? What is this 2.3 million? If the assumption of 50% growth rate on revenue is correct, we need to figure out how to account for this $2.3 trillion. And again, let me remind you that this is per year. So it's $4.6 trillion per year. And so let's go through and figure out what those gaps could be. So let's start with car autonomy. If we look at the 20 million units sold per year and we divide that into the gap that we have roughly an additional $115,000 per year that would come directly from some additional revenue that Tesla is baking into the cars, say full self-driving or whatever else. Now that to me seems incredibly high, and I don't think that's correct. But let's assume that full self-driving is going to be a big deal by 2032, and Tesla will generate some sort of revenue from that piece. So in this case, I'm going to say 20% of that total gap is going to come from full self-driving, which gives us an additional revenue number per car of roughly $23,000 per vehicle sold. That to me seems a lot more realistic. And again, this is not a scientific way of figuring out what those gaps are. This is just gut feel. And I encourage you, as I go through these numbers, what do you think? What does your gut tell you? What does your head tell you? Is there pieces of information out there that you think will help us fill this gap? The next thing that comes to mind is the bot, is the Tesla bot. There's going to have to be some sort of revenue attached to the bot by 2032 if Tesla is actually going to make this true. So that's likely to be some sort of percentage of that gap, of that $2.3 trillion gap. So here's an assumption we'll make. By 2032, let's say that Tesla is able to manufacture 10 million bots per year at an average selling price or an average yearly revenue of $25,000 per unit. And so if we take the 10 million units and we times it by 25,000 per unit, we get roughly $250 billion per year for the bot, which is roughly 11% of that $2.3 trillion gap. And so here are two pieces where we have a rough idea of what the potential revenue impact could be within the next 10 years. And again, these are guesses. I'm trying to be as educated as possible. But here's the deal. If we take those two pieces, we still have roughly $1.7 trillion in revenue that's unaccounted for, which is 69% of the gap. 69%. These numbers keep coming up. What is going on here? What is going on? What's really interesting here is that home storage, utility storage would have already be baked in the assumption we made earlier, where Tesla's going to do roughly $2.3 trillion a year. The 1.1 roughly that's in vehicles, and the other half of it is everything else that Tesla's planning to do with energy. So if that 50% average yearly growth rate on revenue is actually true and it's legitimate for the next 10 years, what could that $1.6 trillion of additional capacity be? I think one of the big pieces here is that Tesla, if they are really looking to keep this revenue number up, their entire business model is based upon batteries. The only reason why Tesla exists is because they're moving away from fossil fuels, and their entire foundation is a battery producing company. A company whose sole purpose is to bring down the cost of batteries so much that it makes financial sense to move the entire global energy consumption and generation over to a battery economy. And so things like selling batteries to other automakers, selling way more than 20 million cars and vehicles per year, selling way more than an equivalent size of energy to cars per year, brand new markets that we wouldn't have thought Tesla was going to enter. But I think that $1.6 trillion number is extremely exciting. It's quite crazy to think about. And I would love to hear in the comments what you think those opportunities are. I'm having a lot of fun sitting down and trying to figure this out. And of course, it's going to be so much easier for us to figure out what it's actually going to be once Elon releases the master plan. But the more exciting thing is the implications of what this could mean to completely transform how we consume energy and how we store energy and how we generate energy. This is by far the most exciting thing that I think is going on the planet. And what Tesla is going to do is going to be so fun to watch, and I can't wait to see how it unfolds. If you'd like to support the channel, I have a Patreon link in my description below where you can become a patron, or you could also join the channel by clicking on join right below this video. Lastly, I have a special link in my description for a special deal with Athletic Greens. Athletic Greens is a supplement that I take every single morning, which I'm really enjoying. I've been using it for many months now, and I really trust it. So if you're interested in that, feel free to click on the link in the description below. Thank you so much for watching, and we'll see you on the next one. Have a great weekend. Bye-bye.